We are talking non-fungible tokens today here on stansberryinvestor.com. Everything you've wanted to know, but we're afraid to ask. NFTs have become all the rage since Twitter CEO Jack Dorsey made news about the fact that he's selling the first ever published tweet as an NFT, a kind of digital collector's item. Dorsey shared a tweet last week with a link to a digital platform called Valuables that allows for the buying and selling of tweets autographed by their creators. The tweet up for bid is Dorsey's first tweet ever in 2006, which says, just setting up my Twitter. Right now, the bid is at 2.5 million. And also entering the NFT game, Rob Gronkowski, releasing his own NFTs. The NFL tight end partnered with non-fungible tokens marketplace OpenSea to release 5 digital trading cards featuring Super Bowl moments. To give us the lowdown on the breakdown on why we need to be up on our NFT game is Vince Lanci, founder of Echo Bay Partners and a frequent contributor to Zero Hedge. And as I like to say, he's my industry insider. Vince, always good to see you here on StansberryInvestor.com.
Thanks for having me, Daniela.
Yeah.
I'm just a guy with one eye in the land of the blind right now.
Well, happy to get the breakdown here on NFTs. We've been talking about it for a while here. If we focus in on Jack Dorsey, right? He's minting the first tweet on the Ethereum run service Cent. And the first thing I want to understand is this bullish for Ethereum, especially, Vince?
It's bullish for Ethereum and crypto that's like Ethereum, and by that I mean Bitcoin is absolutely defined by its scarcity and other things, but Ethereum you can print more of them. So that's something that has been holding Ethereum back. But this application of Ether and potentially other coins like that as a network that's more important than the scarcity. It definitely makes the Ether type of products much more valuable. Yes.
If we take a step back, though, let's take it a step back. How did this concept of NFTs come about? How long has it been around for? And did Jack Dorsey just make it cool?
Yeah, I don't know when the NFT concept started, but people started talking about tokens and ICOs in 2017 when we talked about this before, but I wasn't up on that yet. The concept has been around for a while, and it's been one of the bleeding edges of the crypto world in the sense that if properly used, tokens are like serial numbers. They're like verification. They're another extension of the trustless transaction. We do something with a token attached to it, or the token itself, and we know that it's one of a kind. It's like a signature in that respect.
But with values now being placed on tweets, and I'm sure a lot of people will say, it just seems ridiculous to me. Or with now values being placed on, moments happening in sporting events. I mean, what's next, Vince? Is it like endless possibilities here?
Yeah, it is. All right. The trader in me says, yeah, it's a bubble. It's insane. But the secular trend person in me says this is not going anywhere. So there are. Like for example, as a trader, if Jack Dorsey's tweet is worth $2.5 million,
right,
what's his second tweet worth?
Okay, but on that note, right, $2.5 million for his first tweet. But please educate me on this, okay? What are you supposed to do with that tweet? I mean, how does it become a store of value or wealth preservation or an investment?
Okay, I'm still drilling down on that, but it's kind of like a tweet or any digital art. Let's call that a piece of digital art in that respect. It's digital content. If you purchase a piece of art from someone and it's verified as one of a kind, then it's yours. And I guess you can make copies of it and sell, kind of like lithographs on a painting.
Right.
What I'm not sure about, and I think it has to do with who's selling. So, for example, if Jack sells his tweet for $2.5 million, I believe, and this is from going on the website and looking at what it means afterwards, I believe you can negotiate whether it's one of a kind, meaning I won't use it anymore, I won't make other copies of it, or if it's going to be something that I'm giving you one of, it's an original, it's the first, but it's one of many, kind of like a Hummel to simplify it. But I think to speak directly to the point is is that you are, you made a comment about buying a moment. Yeah, you're buying a moment. The art is the moment. The art is, that's the first tweet, like you mentioned Gronkowski, the moment, the art is him catching the pass. The signed picture is the memorabilia. But now you can do it digitally with less intermediaries, less people getting in the way, less bureaucratic cost, and the artist can be paid better for their work.
And less chances of fraud or fakes, right? You don't
Right,
have
for
to.
now.
Right.
I don't know. Who knows what the future is going to hold? But I agree with you. I mean, that's true.
All this talk about NFTs, kind of resonated with me when I was listening to a talk that Mark Bristow, Barrick's CEO, was giving during the PDAC, the world's largest mining conference, taking place virtually, obviously, this year from Toronto. But listen to this quote, okay? He said, there is an overexuberance in the financial markets right now with investors piling into assets that don't have any real value. So do you see this as an example? Like, could you see NFTs falling into this? Because, what is the real value?
Absolutely. I can look at it both ways, and I want to look at it his way first. To say that there's an overexuberance is true. To say that these assets don't have any real value is true. But to say, and when you hear someone say they don't have any real value, I want you to think of when Peter Schiff says Bitcoin has no intrinsic value. These are comments that I think are not naive, or they're not. I think these comments are naive. To say something has no real value, well, then why isn't it trading zero? So not to criticize Mark Bristow, that's his business, but they don't have any real intrinsic value. But the value is with the buyer. The buyer determines the value. So to see the other side of that, if Jack Dorsey's tweet is worth $2.5 million, then his second tweet should be worth $2 million, right? But I don't see that out there. I see a lot of, right now, I see clout chasing, I see status seeking, but that's the way it always goes with new exciting tech. I mean, how different is this than the .com bubble when people were squatting on URLs? There's not much difference. I think it's a website. It's like a website URL boom. I want to be involved in the tech. I want to be involved in, it's like a FOMO on the next generation. But guess what? That stuff all ends up crapping out. But the internet stays. So cryptos are probably here to stay, although NFTs are probably just, NFTs on tweets is probably just, a hot topic.
But I guess if someone's watching this thinking, well, how do I get in on the NFT game? I mean, are you you could simply just buy one of these memorabilias?
Okay, so your child does a lovely picture of a cow. They draw it. You take a picture of the cow. You put the picture on a website, you have a token attached to it, and you say that this is a picture of my daughter, the cow that my daughter drew. And that picture is going to be I'm not going to make another one of those, and my daughter is going to be famous. She's great. She's going to be Picasso, right? So I go to the site and I go, oh, there's your daughter's picture of a cow, and I buy it. And it's one of a kind, and there won't be any more made. And I know it's verified because it's on there. But the reality of it is that's how I participate on the buy side. On the sell side, you can do it right now. I went to the site and I just put up my most popular tweet. Okay, which I don't have a lot of followers, but I put up a tweet that was just something that I said about during the Iraq-Iran war, and it had, like, I don't know, 20,000 likes, or something ridiculous for my following status, and I listed it. It's for sale now. So if you have cryptos, you can bid on, like, someone will pay 50 cents for it. I'll probably sell it. Who the hell knows? But that the concept is you can list your art, your digital art, seamlessly. So if you create digital art, you get it out there. It's kind of like a stock that was privately held is worth 10, and then when it's publicly traded, it's worth 25, because people are aware of it. It raises awareness. Does that make sense?
What's the current bid on your tweet?
Oh, no, there's no bid. No one cares.
No, I'll put a bid after this interview. Okay. I'm going to support you, my friend.
All right, thank you.
But it makes me think, I have someone trying to sell me a Bitcoin Barney. Maybe they need to be looking at this as a way of doing it.
No, we were talking about this offline. Isn't this just crazy? It's like,
Yeah, I think the bigger picture, and I think the positive thing is it's really getting the conversation going around, why is something valuable? Why
yeah,
is this X amount? Why is that X amount? And beyond that, what is money, right?
yeah.
So that's what I find fascinating
Uh,
and
I,
interesting.
I agree. I mean, when we talk about gold and silver, you'll hear me frequently say that gold's money and silver's not.
Right, right.
But it's like gold is money and silver is currency in terms of the network being worth more than the store value.
On that note, I want to continue with the Mark Bristow topic and gold now, because during the same conversation during the PDAC, he said we should expect another spike higher for gold, even though it seems we've been in bearish territory since August of 2020. Where does gold go from here, Vince?
Well, to his comment, and this might be a little controversial, but to his comment, I would say uh, he's probably right, but he's biased that way. Has he ever played the short side in gold? He's bullish gold. That's his business to be bullish gold.
Right.
So now that I've said that, because he knows more about the metal in the industry than I ever do. I'm just a tactical trader. I think. I mean, look, that's a great question. There is a sentiment indicator, and the kids will call this alpha. All right, here's a little bit of alpha. There is a sentiment indicator out there that one of my clients uses, and it's really good. It's been around for about 40 years, and I can't say what it is, but yesterday it hit its low of 10 years in gold. And last night with gold like near the lows, it hit its low of all time in gold. And that was like Wednesday night, right? So this client who was short and profitable gold covered on that. So he bought something else for long exposure as well. So a spike to 1800 is not crazy. Whether that leads to new highs, I don't know. But whether I think Mark is biased or not, because that's his industry, I do know this. There are some big players out there that have covered shorts as of Wednesday and Thursday.
Do you feel this environment is similar to post '08, Vince, where the market wished everything, would go back to normal, but didn't know the full damage yet? The liquidity that was provided between '09 and 11 was caught in the banks, but this time around, has it arrived in the market?
Yeah, I think in terms of the problem that caused '08, this is an extension of that. But the solution, like you said, as in '08 was we give money to the banks and we hope that the banks trickle that money down to it's Wall Street versus Main Street, right? Right. This time you had stimulus checks going right out to Main Street. This time you have PPP. This time you have small businesses. Whether it's enough or not, I'm not gonna debate. But you have money hitting Main Street, and so I think there's a huge difference between this and then. Back then it was we'll give money to Wall Street and hope it trickles down to Main Street. Now you're like, we're giving money to Wall Street, but we need to give money more to Main Street too because we messed up last time. So the government's doing it right in that respect. But the outcome, to your point, is inflation. Inflation in terms of real inflation in consumables and supply chain goods, and as we talked about before, the explosion in retail stock trading is a comment on discretionary money that people have. People have more money to spend now.
Yeah, this inflation deflation debate, another fascinating topic. I have so many guests on different sides of this. So Vince, you're saying we are headed for an inflationary environment, because on the flip side, I've had guests saying, look how cheap music is, clothing is, movies, most of the technology stuff is free. And of course, the counter argument is, well, groceries obviously have gone up, housing, maybe not rentals so much, especially if we're looking at cities like New York City, but where do you fall?
I can give you two sentences that gives you both sides of the story, I think, relatively clearly, because I obsess about this. First of all, when you're talking about when people want to talk about the market being that we're in an inflationary environment, they look at things that are priced higher. And when they look at, and then you have the other side saying we're in a deflationary environment, they look at things that are priced lower. So the consensus is things that you need to buy are too much, and things that you already have are too cheap. So that soundbite aside, this is where I come down on it. If you believe we are in a bubble, as I do, or an asset bubble, and you believe that we have an inflationary environment, that money that's in the assets is going to come out of that and go into things that we buy. You are right. But the moment, because this market is so addicted to easy money, the moment that you tighten rates or decrease the flow of money into this market, when that happens, the stock market craters. When the stock market craters, businesses which aren't doing much for Main Street anyway will do even less, and you will have a deflationary snapback. So it's really damned if you do, damned if you don't.
Yeah.
And that's how I look at it.
Good thoughts. I could keep going on forever with you on this. I know we were also talking about perhaps a return to some sort of huge recovery as we're on a road to recovery. How big or how small could it be? 1950s style or not? How do you see that?
Oh, that's funny. I'm seeing that everywhere, right? 1950s is the metric that seems to be thrown into the narrative, and I think they're throwing 1950s out, fine, but the reason that it's relevant, because it is relevant, is because it's post World War II economy growth. So if you look at the pandemic, out of the pandemic as a post catastrophic situation growth, they could be spot on with that, which leads me to the punchline. If this is a 1950s growth that we're going to be going through, that's great. And then what comes after that? 1960s and 1970s inflation. So
we covered a lot of ground here today. A lot of ground, a lot of good thoughts. And I can't wait to get you back, because I'd like to pick your brain a little bit more on gold. I'm just going to end on this note, Vince, so I can prep you for our next segment. I'm getting a lot of emails from gold investors, frustrated, really. There's a lot of frustration. They see the Bitcoin rally, they see the Ethereum rally, and they're not seeing that energy in gold, and they want to see it back in gold. So I'm just queuing us up for our next conversation. So start thinking about that.
No, all right, okay. Well, gold's got some rough times ahead, but
stay tuned. We'll talk about it.
I don't know. We'll talk about it. I need to really think about that.
Well, that's why I'm preparing you. I'm preparing you for our next segment.
I'm stressing out now. I can't do this.
For now, just non-fungible tokens.
Non-fungible tokens, whatever that means.
Vince Lanci, thank you so much for joining us here on Stansberry Investor.
Thanks, Daniela. Great to be here again.
Yeah, and thank you for watching. We'll have much more for you, so be sure to check out stansberryinvestor.com. Thanks for watching. I'm Daniela Cambone.